we're at 102.17, and last time we were trading there was back in May 30 of 2022, so almost a year ago. This is MACD we're looking at. We're currently at oversold territories, but if you're noticing something, it looks like every time it pumps, it's only able to reach somewhere where the red line here is, and that is the EMA 20, or in other words, 20-day moving average. So I wouldn't be too surprised if it's gonna try and retest 101.57 again. So the red lines, they're basically the support levels. So those are my confirmed support levels. So as you can see here, the last time it was able to hit this was back in February 1 of 2023, in September 28th of 2022. So MACD was way higher before compared to where it is now, and that is giving me bearish signal in the near term for stocks. My technical analysis for Dow Jones. So as you can see, it's hit another critical resistance that's been getting lower and lower as the months go on. So as you can see here, it's been hitting this for a while now. It was even able to trade above it for a little bit as it was going down back in from when it first crossed below this green line here, traded above it for a little while, like a few weeks, and then went below it again, went up, and then went below it again. So now we're at the point where it's either gonna try to break above it again. It was able to break above it for a little bit just back in December 13th of 2022, and then here we are now. So if we break below this red trend line here, then we're gonna retest possibly as low as 31,000. If not, then it has a chance. It has a high probability of um, going down by 12% or 13%, similar to right here. You see, from August 26, 2022, there was a 12%, around 13% down when we bottom out at October 3, 2022. And then now, if we take a look at NASDAQ, NASDAQ is NASDAQ has been it was able to go down as low as this right here, 10,430, which was a 37.29% drop from its previous all-time high. And same thing here. It looks like it's trying to break past this strong resistance here, multi-month resistance that we've been trying to break past since August of last year, as you can see here. And then lastly, I want to show you is S&P 500. S&P 500 is also showing similar price movement. As you can see, it's trying to break past this green line here, which is a critical resistance, and then the red trend line here is which has been kind of going up, going higher. So from October 13, 2022, that support there is definitely higher than the um, local support that we have now. So this is a critical support right here, and breaking below that would mean that we could drop even further and possibly retest um 3,500. Now I want to talk to you guys about Bitcoin real quick here. As you can see, it's very similar to how it's moving compared to the May 1, 2019 uptrend, which took like 5 months. No, it was more like it was like 5 months of green you see here, and it did have a range for a little while, so it formed that long term or midterm double bottom. So the first bottom was back in January 2019, and then the second bottom was back in March 1, 2020, before moving higher, like finally surpassing the December 2017 top. So right around here, it's kind of doing similar movement right now. So it's a possibility that it'll retest 15,000 again before retesting 32,000 one more time, somewhere around there, 31,000, and then possibly breaking upwards after that. Well, this could take a few months, of downward trend. The markets are in the greed, so I wouldn't be too surprised if it does have a few months of downtrend from here on out. But if we do break out to the upside for maybe one more month, it's probably gonna retest $33,000, which was able to hit back in May 1 of 2022. Bought stocks. So from Alps all the way down to IIPR. So as you can see, they're in the green right now. So people were looking to buy. Most of them are in the green because they have dividend yields, and people want safety at this time. They're not gonna go full risk on. They want stability. They want safe haven assets. So if it's a bond, commodities, anything that could retain its value, or like what I said earlier, like act like as a defensive stock. So if something does go wrong, they'll be the ones that are least affected. But risk on assets are kind of bad right now, so I wouldn't go full risk on, but maybe wait for the pullback, and then you could, if you want, you could buy a little bit of more of risk on asset.